The IMF's Financial Stability Report warns that U.S. stocks remain overvalued and the era of disproportionate bank profits is likely ending. The institution highlights that political and trade uncertainty, partly fueled by former U.S. President Trump's actions, has raised global market instability risks to historically high levels. The report suggests potential for further stock market corrections due to elevated valuations. Rising government debt is also a concern, potentially leading to bond market turbulence, particularly for vulnerable states. For banks, while recent profitability increased largely due to higher rates, the IMF anticipates this trend is unsustainable with tighter financial conditions and potential credit losses likely impacting future earnings. The International Monetary Fund warns that American stocks remain overvalued and the era of disproportionate bank profits may be nearing its end. In its Financial Stability Report, the IMF states that Trump's actions have in just a few months escalated the risk of instability in global markets to historically high levels. The institution cautions that stock markets could still face further corrections, that rising state debt could lead to increased turbulence in bonds, and that banks should anticipate reduced profits in the near future. As analysts digest the IMF's report, headlines scream warnings of upcoming corrections in financial markets. In coffee shops and boardrooms alike, discussions swirl around the implications of this forecast, with many wondering how it will affect their investments. The spotlight turns to bank executives who now face the daunting task of recalibrating their expectations for profits amid mounting economic pressures. As the stock market ticker flashes red, signaling losses, traders scramble to reassess their positions, faced with an uncertain future. In boardrooms, executives attentively analyze reports, voicing concerns over declining profit forecasts and strategizing on how to navigate the turbulent waters ahead. They know that adapting to the new economic climate will require innovative thinking and careful planning. In co-working spaces, young investors dive into research, brainstorming alternative strategies to capitalize on the shifting market dynamics. They share ideas and insights, eager to find opportunities amidst the chaos. Meanwhile, the atmosphere at the stock exchange is electric, with traders animatedly reacting to the rapid changes. There faces a mix of determination and apprehension as they grapple with the day's unpredictable developments. Investors anxiously monitor their devices, uncertain about whether to hold or sell as stock prices oscillate wildly. Meanwhile, a news anchor breaks down the latest market trends live from the trading floor, providing insights and forecasts that weigh heavily on the minds of those watching closely. The urgency of the situation grips the nation, with everyone eager for clarity in an increasingly volatile environment. In the stillness of the night, dedicated analysts sift through mountains of financial data, desperate to find patterns or insights that could inform their next moves. The bright lights of the financial district stand in stark contrast to the uncertainty that hangs heavily in the air, a visual reminder of the unpredictable journey that traders must navigate as they seek stability.